Hey everybody, it's Jonathan Rose and welcome to Masters in Trading Live. So every single day, 11 o'clock Eastern Time, we're going to get on here, give you a little bit of a market update and share one trade every single day. So today, we're going to go over 3-4 topics. One, a Robinhood trade. We shared that in February. Today, Robinhood is spiking. Get on Prince. What does that mean? There's 3 ways to manage an options position. I'm going to go over options position management. And when we see a move like Hood, we want to get on Prince. One way to manage your options position is called gamma scalping. It's an intimidating name. It's a lot easier than you think. Excited to show you. And then you got to see this trade. $1.3 million trade on a relatively small company. So let's get right into it, guys. So I have you at the charts. We're going to start right here. February 23rd. Put something out, guys. Buy Hood, Robinhood. Let's buy the 14 strike, $1.75. Now, the reason we wanted to get in Hood February 23rd is because everybody and their sister was buying a Hood. There was just an enormous amount of unusual option activity. And the more I thought about it, the more it kind of made sense because coins are rallying, right? Bitcoin's rallying, Ethereum's rallying, Coinbase is rallying. Not too surprising that Hood is rallying next. So this trade made a lot of sense to us, guys. Let's buy the 14 strike and let's just follow that unusual option activity. After we got into that trade, February 23rd, crypto, Coinbase, Robinhood, they've really been going straight up. And today we're seeing some really nice follow through. So I wanted to get on here. And obviously we got in the 23rd trading at 14, the stock's trading at 20. What do we do? This is a great trade. Congrats to everybody in there. But it's one thing being in a trade, but then once you're in that trade, what do you do? Here's what I like to do, okay? The original trade, I took this screenshot a little bit earlier today. Right now, Hood is trading 20.23. And those 14 strike that were trading at 175 are trading about 620 mid-market. So that's obviously just a enormous trade, right? You buy something for $1.75 and it's trading 620. Great job. But what else can we do? It's a question that I get so often. We're in a trade, we're up a whole bunch of money. What do you do next? So I like to say there are 3 things that you can do with your options. Now, the first thing you can do is go ahead, get out, right? Sell and you get out for 630 or whatever. That is a heck of a trade. The problem with that trade, and let's all have these problems, but the problem is you paid for time and you are giving up all your time. You have no more optionality left. You covered your trade. Another thing that you could do is let's say you're long from 14, okay? And yeah, they're options, but you can look at this as just being long from 14. When the stock gets up to 20, you could sell stock. Let's say you're long one option. If you're long one option, it's just like you're long 100 shares. You could sell 100 shares. You're long from 14, it's $1.75. Stock rallies up. You make $6. The difference between 20 and 14, less what you paid, and you sell 100 shares. You don't have any more risk. It's pretty cool. Now, you still have to hold this position for 51 days, but the really cool thing about this, if Hood has accounting problems and it trades down to 10, you could buy those right back, and then you make 10 on that trade. This is called gamma scalping. It's a little bit more advanced, but I wanted to show you this because it's another really cool option that you could do with your stock. So let me erase this, because the other thing that you can do, and I like to do this too, and if you've been watching the videos, you probably see me do this. This is rolling it into a vertical spread. Let me just erase that, get my pen back on here. Let me just show you that, because this is a really cool thing to do as well, and something we do quite often. 14s, right? You're long from 14. Well, you can also, let's say we go right here on these 22s, and we sell those for $1.65. Okay, we sell for $1.65. We bought these for $1.75. Now, our risk is just a dime. It's nothing, right? But our reward is the difference between those strikes. So the reward now is $8 less that $1.75. And then you just need, and this is going to be 6.25. And to optimize here, we just need Hood to trade over 22, which it looks pretty good. Looks like it's going to do that. So it's really, really important. I'm going to jump on here live because it's so important. I want to say it live. Trading options gives you options, right? A little corny. But the reason that you trade options is because it doesn't just lock you into being long a stock with one binary option where you can get out or stay in. The great thing about options is that it lets you extend the life of your position. So learn the 3 ways to manage your options positions, okay? You can just get out of your options. You can sell stock, which we call, I guess I gotta get it that way, gamma scalping. Or the final thing you could do is put yourself into a spread. Let's get to the trade. $1.3 million trade. This trade was in a company called Owens & Minor. Owens & Minor, I got to tell you, I've never heard of this trade. I got a great question from a colleague, Lisa, and asked, do you care about the quality of the company, you know, the business score of the company? Because never heard of OMI, O-M-I. And truthfully, either have I. I've been trading my entire career. I haven't traded. I don't really care about the company. I care about the action. I care that OMI is a $2 billion healthcare company. And yesterday, the biggest trade of the entire year by a huge amount. Before that, the biggest trade was 75,000. Yesterday, they did 1.3 million. Now, I want to take a step back. I think that someone did a heck of a bunch of research on OMI and placed a monstrous bet. So rather than doing the analysis of what I think of OMI, the company, I want to follow the unusual option activity, because that unusual option activity gives us advance notice to the direction of the stock. Now that trade happened at 2:53. 2:53 Central Time. The market closes at 3 o'clock Central Time. That was right here. Market makers got caught short. Market makers are being forced to cover. That makes the stock go higher. OMI is an incredibly bullish trade on a relatively small stock. So the trade that I like, OMI, I just took this a little bit ago, last trade, 27.05. Only 47,000 in underlying equity volume traded in the first hour of trade. This is the order, guys. 7,000 7,000 times 100 is going to make this person long 700,000 shares. Once that stock trades in the money, it's in the money. Now, why would they do the trade in the options but not in the underlying? Because the underlying isn't big enough. The trade that I like these mid-market, or just buying these for $250. I wouldn't mind considering a vertical spread in the future. Not yet. Trade management. We're in this for 86 days. Patience. Relax. Buy for $250. $250, 27 strike. I will continue updating this trade when we see movement, because eventually we're going to want to try to sell something up here for $2 or so, but that trade is not presenting just yet. Congrats to all those hood traders who were able to lock in a crazy profit. We're going to get on here 11 o'clock Eastern time every single day, and I'll share my trade of the day. Let me leave you with this, guys. I'm a big believer that traders who look at things from a different perspective are going to find the most success. We like to say the creative trader wins. So trade smart. My name is Jonathan Rose, founder, Masters in Trading.